Welcome, ladies and gentlemen, Commodity TV out of our studio here in Herisau in Switzerland. Welcome, and we have now here Victoria Gold. I think for the third or fourth time even, John McConnell, the CEO, and we were traveling already the whole week together with Osisko Gold Royalties. And now, of course, we want to do an update interview for our viewers. John, welcome.
Yeah, good day.
Yeah, perfect to have you here now in our lovely studio. And you are building the largest gold mine in the Yukon. So how is it going? How far are you with the construction? What does it look like?
Yeah, largest mine in the Yukon history. There's never been a mine, never been another mine this large.
Wow. Okay.
So it's going well. We're about 30% complete. Mm-hmm. We're on time, on schedule, on budget.
That's important. On budget, I wanted to hear.
We had a little bit of trouble in the spring. It was one of the wettest springs on record, and we got a little bit behind on some of the earthworks, but July, August, September have been beautiful, and we've caught up, and we're slightly ahead of schedule now, so things are going well.
Fantastic. And as I think when you started to raise the money, what was the market cap when you raised it? How much you raised? And because I think it was like 2 to 3 times your market cap, right? And that speaks for the quality of the project.
Yeah, I think, we reached an agreement with Orion, Osisko, and Cat Finance. But before that, we had been working with one of the larger banks in the world, BNP Paribas. And the debt was there. They were quite happy to write us a check for $220 million US for the debt. Super. But as you know, the capital markets have been tough these days. So, getting the equity seemed impossible. So we turned to our friends at Orion, Osisko, and Cat and said, you guys have looked at this. Is there an opportunity to do something?
And what have they paid for the stock?
That's your favorite question.
I love that, actually.
So, we did equity and a royalty with Osisko, debt and equity with Orion, and an equipment lease with Caterpillar. And the equity price was at 50 cents a share, which was then I think we were trading about 40 cents, so it was a 20-cent premium to our share price at that time.
Fantastic. So people today can buy 30% cheaper than Osisko, right?
Absolutely.
Wow, it's a good bargain, ladies and gentlemen. No, but that was our running gag in the week. But to be honest, I think it really shows the quality of your project. It really shows the hard work you guys have put in. And as far as I know, Sean Rosen, he's not spending $150 million without doing a double due diligence, right?
No, that's correct. I think for investors, they can take a lot of comfort that both Osisko, Orion, and Caterpillar did their due diligence.
Exactly.
Particularly Osisko. Sean and I have been talking for more than 4 years now. His team has been to site 3 or 4 times, and they scrubbed the project pretty good. And similarly with Orion, they don't make those kinds of investments without being comfortable with the asset.
Super. Maybe you can refresh our mind a little bit with some facts and numbers. So how many ounces you think will be then in the commercial production possible, and what are the ASIC, and where do you see, let's say, the payback?
Yeah, it's a significant mining operation. We'll be producing 200,000 ounces of gold per year for the next plus 10 years, all-in cash cost of less than $550 and an all-in sustaining cost of less than $750. So if you think about that, $500 margins at $1,250 gold, 200,000 ounces of gold per year, means we'll be cash flowing $100 million per year US
exactly
in 2020.
And I think that's a nice amount of money. Aside, you have to pay the debt, of course. And how long do you think you need to repay the debt?
Yeah, at $1,250 gold, 78 cent Canadian dollar, we pay back the debt in less than 3 years.
Wow, that's fast. Fantastic. Yeah. And then maybe you have rooms for dividends?
Maybe. We'll see. I've been in this business a while, and I think there's two options. We build a mining company with the help of Osisko and Orion and their support, or an Agnico, Kinross, Barrick come along, and we know they don't have pipelines of projects and need ounces to replace their what they're mining every day. So maybe they'll pay up to our shareholders.
Okay, so we are talking already a bit about the future. I know it's a forward-looking statement, and I only want to have, let's say, like a rough estimate. Yeah, I don't want to nail you here on a number, but you have a large land package, of course. Yeah, do you see? Of course, you see exploration potential, I'm pretty sure on that. But let's say now you have like a 10, 12 year initial mine life. What is your imagination, what you see now, and maybe with more exploration work, let's say you invest another 20, 30, 40 million over the next years in exploration. What could you imagine how long this mine can produce?
Yeah, just some, facts and figures. The current feasibility study open pit goes to about 450 meters. We've drilled to over 650 meters, and we're still in mineralization at over a gram per ton. So at depth, there's certainly potential to expand the pit with changing economics and extend the mine life. Then we have areas along strike. We have all of Shamrock, which is, beginning to look like a nice little satellite deposit. But as we get further away, we're exploring areas like Bluto and Nugget. And I'm pretty comfortable, my gut tells me this will be a 20 to 25 year mine life.
Fantastic. As far as we saw in your fantastic video, the pit scenario now is like 1,050 meters long, 550 wide, and 475 deep. I think for an open pit, that's quite a nice depth, I would say. How deep you think in the future, if you find more, as you said, you drill to 600 meters, you're still in mineralization. How deep can you go with such an open pit? Because it must be from the static, it must be critical on some
it's an interesting deposit because it's on the side of a hill. So, the pit wall on the eastern end gets fairly high, but on the western end doesn't. And as you go deeper, the stripping ratio increases, so the mining costs go up. But you got to remember, we have a very low strip ratio at less than 1 to 1. And that's what really changes the economics.
Yeah, even if you go to 2 to 1, what is the average in the world? It's like 3 to 4 to 1, I would say. Sometimes.
Yeah, I don't know what an average is, but it's probably at least 4 to 1.
Exactly. Yeah, I mean, we saw mines with 8 to 1 and they still make money. So from that perspective, all is possible. Fantastic. Considering now the construction, I mean, you have done your homework on metallurgy. You know how to work the rock, etc. Yeah. What would you consider might be a risk, like weather, winter? What might be challenging? And also, do you have a financial cushion? As we all know, mining is not like that you push a button and then you are fine. Mining is always an adventure. So, do you have a financial cushion if something might occur?
Yeah, I'm a pretty conservative guy. Yeah. And
I like that.
The last thing I want to do is have this project fail. So, the feasibility study capital cost was 442 Canadian. We raised 500 million Canadian. Part of that is for additional working capital because single asset companies, if there is a hiccup, they're going to have a problem. So we want more working capital. Similarly, we raised the first 18 months of sustaining capital in that number. So we've been very cautious. We've got good partners in Osisko and Orion, and they recognize the risks. So they were quite comfortable with us raising more money than the feasibility study as well.
I mean, a $60 million cushion should cover everything, I would say.
Yeah, I would. Yeah, I'm comfortable that we've got the right amount of money.
Super. What is the next big step in your construction where you see, okay, that's the next major milestone we have to finish? Before the winter comes, maybe also?
Yeah, the key right now is, the primary crusher, the secondary crusher, the gold recovery plant. We want to get those buildings up, get the equipment in place, get the buildings enclosed so we can put heat in. And then during the coldest months of the year, we'll do the interior electrical, mechanical work.
I see. Perfect. Super. Then I would say good luck, John, with the construction of your mine. And we definitely meet us, I would say, latest at the PDAC. And then we need to have some beautiful video footage, probably at least photographs that you tell me then, Jochen, 75% is completed of the construction.
Well, as you've seen, I keep sending out video updates, photo updates.
On the website?
It's a lot of fun building a mine.
Absolutely.
And it changes every day.
Super. Perfect. Thank you very much.
Thank you.
Thank you. Yeah, ladies and gentlemen, there was John McConnell, CEO of Victoria Gold. And you heard it, they are building the largest gold mine in the Yukon ever with 200,000 ounces production per year, $750 AISC. And honestly, even in low gold markets, a lovely, healthy margin. And the company is fully financed, has all the permits, they are fully in construction, over 30% are built now. And I would say if you can buy 30% cheaper than John Rosen, that's worth to consider. Thanks for watching us. Bye-bye from Hedesau.